Hi and welcome to the week ahead with London Capital Group. Now joining me to discuss next week's potential market moving events and data releases for the week beginning Monday the 22nd of June is London Capital Group's very own Ipek Ozkardeskaya. Ipek, thank you very much for joining me. Now first of all, I just want to start off by saying that this week was again another Greek headline dominated week as usual at the moment, and on Friday the ECB they did raise the emergency funding cap for Greek banks. Tell me first of all, what's the sentiment like in the markets at the moment about this?
Well, the sentiment is obviously nothing good. We keep hearing about Greece. There is whether there is an agreement, no, there is not an agreement. So the sentiment is people are just getting bored right now. So the market is not pricing anymore very significantly the Greek issue. We are just waiting for something to happen. So this week we heard IMF's Lagarde saying, okay, June 30th is going to be the last date. If Greece doesn't pay the 1.6 billion euros due to us, so it's going to be a default facing the IMF. So that's one issue. On the other side, with the EU officials and Greek finance minister and Greece Prime Minister Tsipras, the things do not move quite fast. So Greece is basically going fast to the wall, and giving this ELA liquidity is just kicking the can down the street, but at some point it's just going to hit the wall and just come back. And that day is just going to be it won't be a disaster for the EU, but it's going to be a problem for the Greek liquidity and the Greek banking system.
So we can obviously, I'm guessing it's quite fair to say, expect to see further market volatility next week, obviously going into next week regarding Greece as well.
Well, obviously, because any news can just kick on the upside or the downside. The problem with the upside is that now we are in an upside trend in euro dollar especially. We have seen some good levels this week. We are going to the key resistance level of 114.50, 115 levels right now. So when people take these positions, they're probably and perhaps not taking them boldly. So there's a risk management. There are stops being accumulated as euro dollar goes on. So for bad news, if a sell-off just kicks on these stops, that's going to be an accelerated move on the downside. So that's the downside risk that we see in euro long positions at the moment. However, we can remember that in 2012, after the Greek default, euro dollar had kicked 120 and then gained 20 big figures to 2014. So this means that the euro's value is not fundamentally at risk. However, in the short run, we can see an unwind, and that's the downside risk.
Okay. Well, I mean, if we now then do focus on next week, it's quite a quiet one on Monday in terms of economic data. So I want to kind of combine Monday and Tuesday together. Now, on Tuesday, we've got purchases of previously owned US homes, and they're to expect to have rebounded in May. Now, also, that's on the back of job gain, cheap financing, but US durable goods are to expect to have fallen, as are sales of new homes. In that case, what US dollar crosses are we going to be keeping a close eye on next week, and also what kind of scenario do you see playing out in terms of levels?
So the data is important in the US because now that we are just getting closer to a rate normalization, we know that the economic data will be in the center of this discussion because it's going to be decisive in Fed's decision to get this normalization plan into action. So basically, this week we have seen a softer FOMC. Basically, formally it was thought or planned that the Fed would proceed with the first rate hike by June. So it has not happened. So per se, it was a dovish move. Now we are still looking at September and December kickoff in normalization. However, the data is important, and Yellen said it this week in the FOMC meeting. So this is why we're going to look very closely at how the U.S. economy is doing. For the U.S. spending, we expect some good results, especially on the spending and the earnings side. So if that gives some good news, that might just revive the hawkish expectations on the Fed side and help the dollar a little bit higher this week after the sell-off that we have seen after the FOMC meeting.
Okay. On Wednesday, we've got several economic data releases, but the big one here, I would say, is definitely the US first quarter annualized GDP data. What's the market expecting from this then?
So the last time we seen a very negative surprise was minus 0.7% on quarter annualized. Obviously, this revision should be minus 0.3%. So we are expecting some improvement or revision on the upside. If that doesn't happen, obviously that's going to be a problem for the Fed expectations. But we believe that minus 0.7% was a big downside surprise, so there should be some revision on the upside, so there's not going to be any problem on that side. That will most probably not. If there is no surprise there will be no fireworks on the market. It's not going to shift the expectations of this week any further.
Okay, in terms of, you mentioned perhaps not any fireworks on Thursday. It's definitely a quiet one this week, I will say. We've got US jobless claims, and we've also got US personal income and spending. I think you mentioned it briefly earlier. Is the market really holding out for anything spectacular or spectacularly interesting for these
two? We do not expect anything very spectacular unless the data hides a big surprise. At this moment, we do not expect anything, any bad or good news, or any shift in the Fed expectations out of this data, because they are not meaningful. The meaningful event was this week, FOMC. So this data is just going to be a minor release.
Okay, so I want to finish off the week then with Japan. We've got on Friday morning, the economic calendar seems to be very much focused on Japan. We've got jobs data, inflation figures. We've also got some household spending data coming out. Earlier on the week, we would have already seen Japanese manufacturing data. So what's kind of levels, should I say, that we should be watching out for Japanese yen?
So the BOJ is quite confident on the economic recovery, which is still moderate. So BOJ decided to keep its monetary policy unchanged on, well, today's meeting, basically. The target is still 2%, and the governor Kuroda said that until they reach the 2% target, they will do whatever is necessary. So this gave the yen a little bit of downside today. However, we have seen the yen getting on its feet against US dollar. So we are now at the, technically speaking, we are at Ichimoku Cloud's baseline. So it's about 122.50 levels. If you break down this level, so it's going to be, we will be facing 120 levels quite fast because of the soft US yields also, obviously. So from Japan, it's important. So the inflation data is important. The inflation, a soft inflation rate, will just stabilize the levels above the baseline. However, a stronger inflation read will most probably keep the trend on the downside on dollar yen, and we will be talking about 120 levels early next week, or no, further next week.
Okay, lovely. Thank you very much, Ipek. Now that's all on the economic data side of things. Just briefly touching on the corporate side, in the UK we've got Telecom Plus, Stagecoach, and also DS Smith. They're reporting full year results throughout the week. And on the US side, we've got Nike, BlackBerry, and also Monsanto. They're also all the US companies, some of which are reporting US earnings next week. That's all for today's Week Ahead. Goodbye for now.